Very few homes are being listed for sale right now. This is the first week since winter where inventory declined week over week. It's not uncommon for inventory to plateau in August and September with a little up and down each week before declining significantly starting in like October. So assuming this year follows some normal historical patterns, we could see a few more weeks with inventory increasing or decreasing, but basically we're at the peak of inventory until next year at this time. As we've been pointing out lately, this means that we'll start 2023 with a pretty severe shortage of homes for sale. We'll have more than last year on the market, but fewer than even the first pandemic year, 2020. So the fact is, homeowners don't have to sell, and they're not selling. If you're already a homeowner, you have a really good deal with equity and mortgage rates. So if the economy slumps into recession, we'll likely see more sellers, but even that seems unlikely to yield a big surge of new listing inventory. We're going to keep watching each week to see if anything like that materializes, but as of right now, we're looking like a very, very severe shortage of homes for sale, fewer than any except the beginning of this year. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, it might be the time to step up. Go to altosresearch.com and book a free consult with our team because everybody is worried about what's happening right now. So they need you to help them see more clearly. I'm Mike Simonsen. I'm the CEO of Altos Research. We took the week off last week for the last vacation of the summer. But here's what we're looking at for the week of the Labor Day week, September 5, 6, 7, 4, 2022. Available inventory of homes for sale dipped this week to 553,000 single-family homes. That's 1% fewer than last week. So declining inventory right now isn't a big sign of demand like it was a year ago, but it is now a sign of restricted supply. It probably shouldn't have surprised me given that homeowners really have not been selling their homes for a decade. But frankly, I assumed that this summer and fall we'd have significantly more inventory available. I presumed that we'd have some sellers maybe panicking, listing their houses, even when buyer demand had stopped cold, but that's quite obviously not happening. You can see the series of annual peaks in the chart here that, we're at this annual high of homes on the market, a little plateau each year. Since the first week of July, there's been no surge of inventory. Sellers are simply holding on to their super cheap mortgages and at high rents for investors. For the rest of the year, we're projecting still not many new listings and also not many sales. So we expect the annual decline in inventory to be much gentler than previous years. See the dotted line here finishes 2022 almost flat. Most years, available inventory declines pretty steeply between now and January 1. It seems quite obvious, though, that we're going to start 2023 with fewer than 500,000 single-family homes active on the market. Buyers will be facing very limited selection. And this is why I've been saying that for buyers in the market now, it probably doesn't make a lot of sense to wait in hopes of greater bargains coming soon. There's not going to be a lot of choices. Mortgage rates in the future are unknown. So if you find a house now that you love and that you can afford now, I don't see anything in the data that implies that suddenly things are going to get much better for buyers in the future. That's just one perspective on how you might think about what's coming if you're a buyer in the market right now. The trend to watch for inventory will be whether supply over the next few weeks and months follows this flat curve or whether it dives deeper like normal years. And then after the first of the year, do sellers come to market trying to unload? Maybe they anticipate recession or other economic challenge for the coming year. Or do they continue to hold on to these great investments that they currently have? And so those trends, that demand and supply trend resets after the 1st of January. So we'll definitely keep our eye on it at that moment. Home prices are ticking down. This is a seasonal change and it happens every year. The median price of single family homes in the U.S. fell 1% this week to $440,000. As the seasonal home price decline transpires, we can expect prices to settle in under $420,000 by the end of the year. And this is what we've been saying all year, is that you can really see it's about a 10% price gain over 2021 is where we'll end up. One of the reasons that no one wants to sell their house is because everyone has so much equity. So you gain another 10% this year, just holding on this year. So we're in this very funny cycle right now. The common perception is that the economy is a wreck and everyone is hurting, but I'm doing well. Like everybody else is a wreck, but I have lots of equity. I have a cheap mortgage. And so what's happening is that this misperception leads us all to assume that homeowners are in rough shape and they're going to have to sell, when in fact, they're in their best shape ever. You can see the demand shift in the light red line here, though. So the price of the newly listed properties each week is down to $389,000. You can see the light red line ticking down each week. We'll watch this number most closely after we turn the start of the year. But at that point, we'll be able to gauge whether demand is coming back for 2023 or whether it stays cool and prices remain flat. You can see how each year the light red line declines notably in the second half of the year. So this year's decline isn't scary at all, but it does show that we don't have extra strong demand. There's no driver for price increases coming next year. That's really why we see flat prices in 2023. We did have an uptick in price reductions this week. So currently just over 40% of the homes on the market have taken a price cut from their original list price. Price reductions will continue to climb through October as the homes on the market now start aging and they will look to find buyers. If price reductions climb to, say, 45%, that'll be pretty bearish for a signal for 2023. It implies very few buyers and prices will have to adjust down. For homes that cut their list prices now, these are lower transaction prices when the sales happen sometime out in the future. And in particular, Boise, Phoenix, Austin, and the Utah markets top the list of price cuts around the country. Those markets will definitely see home price declines in 2023. Using our immediate sales tracker, we can illustrate how few new listings are coming to market right now, how few homes are available for sale right now. We had the fewest new listings this week than any time since the middle of winter. It's now the Labor Day holiday week, and we'll have another week with lower inventory when the data comes out. These are fascinating times. It's hard to say who wins this battle, buyers or sellers. My gut says that the buyers who are well-financed, they will have much more ability to make offers and get the homes they want. It's a much more healthy market than it was a year ago. Sellers, though, will keep staying away. They'll prefer to hold on to their homes, their investments, and that limited selection will drive a lot of the market dynamics in the coming year. So even though it's easier for buyers, it doesn't look easy. The fact is, this wild real estate market is puzzling everyone. The only thing we can really do is watch the data and learn as quickly as possible where in supply and demand lead us. If you have buyers and sellers in the market looking for guidance right now, make sure you get them the data so they can see very quickly what's happening in your local market. So even in those most hard-hit markets, there's probably some signals that that slide is slowing. But the buyers and sellers need to know that. And they have all kinds of crazy ideas about the market from all sorts of different sources. So go to altosresearch.com, sign up so you can get the data in your hands, in the hands of your clients today. There's a link in the description below. That's all the data we have for this week. Back to normal schedule next Monday. See you then.